This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Big rally on Wall Street. Washington lifts the market as all of the major indexes finish at all-time highs.
Step forward. The Senate's tax proposal advances, bringing the upper chamber closer to a floor vote.
And digital pills? Can sensors in capsules put a dent in opioid abuse? Those stories and more tonight on Nightly Business Report for Tuesday, November 28th.
Good evening, everyone, and welcome. Stocks rallied to a record despite a mid-afternoon dip after North Korea fired a ballistic missile. We'll have more on that development in just a moment. But we begin with those fresh records on Wall Street as investors eyed events in Washington, like tax reform, and comments from the Fed chair nominee. The gains were broad, the closing numbers attention-getting. The Dow Jones Industrial Average climbed 255 points to 23,836. The Nasdaq added 33, and the S&P 500 gained 25. Investors were glued to three stories tonight out of our nation's capital. We begin with Elon Musk on the advancement of the Senate's tax reform proposal.
The Senate Budget Committee voted to move the Republican tax plan to the floor today, and that means the GOP is on track for a final vote by the end of the week. Now, this was a critical step because there are still several Republican senators who are on the fence over this bill. Senator Ron Johnson of Wisconsin says he wants bigger tax cuts for pass-through businesses. And Senator Bob Corker of Tennessee is worried about the impact on the deficit, though he did tell reporters that he has reached a broad agreement with GOP leadership to ensure that his concerns are addressed. Now, debate over this bill was interrupted several times today here on Capitol Hill by some very passionate protesters. They were shouting, "Kill the bill, don't kill us." And that's because this tax plan includes a repeal of the individual mandate, and it could also trigger some deep cuts in social services. So this is no longer just a tax cut bill, it is also a bill about health care. Now, in the end, this just ended up forcing Republicans to vote more quickly to move this bill to the floor. The fate of the tax plan over the next few days is still uncertain, but at least Republicans can now continue the process and continue their negotiations. For Nightly Business Report, I'm Elon Musk in Washington.
Investors also got some clarity on the direction of interest rates and monetary policy when Jerome Powell, the man who could and probably will be the next leader of the most powerful central bank in the world, answered lawmakers' questions. Steve Leisman reports on today's Senate confirmation hearing.
The more Fed Chairman nominee Jerome Powell spoke at his confirmation hearing today, the more the stock market seemed to like what it heard. The 64-year-old Fed governor was named by President Trump to replace Fed Chair Janet Yellen. And the more he spoke, the more the S&P seemed to accelerate to the upside as he indicated he would continue those gradual policies of Yellen.
We have low unemployment, 4.1% unemployment. We've got strong growth. The very low settings of interest rates that were appropriate during the crisis and after to support economic activity are no longer appropriate. And that's why we're raising interest rates now on a gradual path. And I expect that will continue.
Powell expressed some belief that the jobs market could run further without sparking inflation, and that low inflation allows the Fed to keep moving rates up just gradually. Bank stocks rallied as the Fed chair nominee has supported some regulatory relief for banks, especially small and mid-sized banks. Powell looks headed for confirmation, even bipartisan confirmation, first by the Senate Banking Committee and then by the full Senate sometime before Yellen's term ends in early February. For Nightly Business Report, I'm Steve Leisman.
And Congress also has to pass a funding bill by December 8th to keep the government up and running. But if today's any indication, that might not be simple. Eamon Javers is at the White House.
It was expected to be a day of deal-making here at the White House, but instead it was a day of showdowns politically as the president began by tweeting out an insult to Chuck Schumer and Nancy Pelosi, calling them weak and suggesting that he didn't see an opportunity for a deal with the two Democratic leaders. That prompted the two Democratic leaders to issue their own statement saying that they weren't going to come to an event that was scheduled here at the White House at 3 p.m. Later in the afternoon, we saw the president appearing at that event with two empty chairs side by side in the Roosevelt Room at the White House. The Democratic leaders snubbing the President of the United States, the president expressing some frustration with that, going on to meet with the two Republican leaders from Capitol Hill who'd come here to the meeting. All of that not boding well ahead of December 8th. That's the deadline where they need to have a deal cut on government spending in order to keep the federal government from a shutdown. Not clear yet whether there is a deal. Republicans will need some Democratic votes to help them, and at least for now, there were no Democrats in the room with the president when the negotiations were ongoing. For Nightly Business Report, I'm Eamon Javers at the White House.
Greg Valliere joins us now to discuss why he thinks the events in Washington could make today the most important day of the year for the markets. He is Chief Investment Strategist at Horizon Capital Investments. Good to see you again, Greg. Welcome back.
Nice to see you. Hi, Sue.
Let's start with why you think today, in particular, there have been so many moving parts on the capital rate lately. Why is today so important to the markets?
I think two really huge stories. Number one, a clear sign that we've got a very solid Fed chairman who will be confirmed, who's not going to overdo it on rate hikes. I think he passed with flying colors. Number two, you got to say that the tax bill made another important sign of progress. I think we are going to get it. Might still take another couple of weeks, but the momentum behind this tax bill is remarkable.
It does seem, doesn't it, Greg, that a couple of key senators, like Mr. Corker, may have found a way to overcome their concerns about ballooning the deficit.
Yeah, it's kind of a Rube Goldberg scheme that if the deficit increases, if revenues don't perform as advertised, you could go back and raise taxes in the next 2 or 3 years. That's kind of convoluted. Maybe that's going to be enough to satisfy the deficit hawks. But I think whatever it takes, the dissidents are going to be won over.
You know, Greg, everybody was assuming that tax reform was already in the market. But with the gain and the rally that we saw today, it doesn't appear as if that is the case.
You could be right. I still think Powell was a big, big factor today. But if we get this bill with dramatic cuts in corporate rates, I think there's probably still some investors who would say this is really good for earnings, especially for small cap stocks.
It did. This tax bill did pass the Senate Budget Committee, which was a key procedural hurdle today by the slimmest of margins, 12 to 11. Is it your betting that they will get the 50 votes that they need in the Senate to pass something over the next couple of weeks?
It might take a vote by Mike Pence to break a tie, Tyler, but no, I think they're going to get it. You're going to have to cut a few more deals. One really interesting angle is that more deals could cost more money, and the bottom corporate rate may not be 20. Maybe it's 22 or 23. Donald Trump might not like that, but I think he'll take pretty much anything he can get at this point.
On that note, great to see you again, Greg. Thanks for joining us.
All right, you bet.
Greg Valliere with Horizon Capital Investments.
Well, the rally today was not one of those smooth upward glides we've grown accustomed to. It hit an air pocket. As we mentioned, stocks cut their gains basically in half midday after North Korea fired a missile that landed in the waters off the coast of Japan. But the markets did recover as the tax bill and comments from the nominee to lead the Fed outweighed whatever geopolitical concerns there were. But investors are paying attention to Asia. Akita Fujita is in our studio in Tokyo tonight.
Well, North Korea conducted its latest ballistic missile test at 3:18 a.m. local time. The missile reached an altitude of roughly 2,500 miles before landing into Japan's exclusive economic zone. It flew for about 54 minutes, making this North Korea's longest test yet. And the Pentagon and Japan's defense ministry both saying this was an ICBM and would have the range to reach the U.S. This comes just 1 week, of course, after the Trump administration added North Korea back to the list of countries that sponsors terrorism. And it certainly points to the advancements Pyongyang has been making in its nuclear weapons program. Just yesterday, we heard from South Korea's unification minister saying that the program was developing at a faster pace than initially thought and could be near completion as early as the end of next year. Back to you.
Thank you so much. Still ahead, will UPS deliver?
I'm Morgan Brennan in Louisville, Kentucky. From a record shopping weekend to record shipping season, we'll tell you how the biggest delivery companies are gearing up to make sure your packages get delivered in time for the holidays. That story is coming up on Nightly Business Report.
A legal win for the Trump administration. A judge today ruled that the White House budget director, Mick Mulvaney, could remain as acting head of the Consumer Financial Protection Bureau. As we've reported, agency official Leandra English filed a lawsuit that claimed she should hold that position.
Consumer optimism is soaring this month, according to the Conference Board. Its latest measure has hit a 17-year high. Americans feeling good about their economic prospects. Economists pay close attention to the index because the consumer and his and her spending accounts for 70% of economic activity.
Well, if consumers are feeling good, economists believe they'll buy more, keeping companies like UPS busy, especially during the holiday shopping season. Morgan Brennan takes us inside UPS's largest air hub in Louisville, Kentucky.
If you did some online shopping over the holiday weekend, some of those packages could be moving through here. This is UPS Worldport, the largest automated cargo air hub in the world. During the peak holiday season, 318 cargo planes take off and land here each day, loaded with packages sorted on 155 miles of conveyor belts that over the coming weeks will handle double the normal daily volume. UPS plans to deliver 750 million packages this holiday season, another record.
We are expecting a 5% increase between Thanksgiving and Christmas this year over last year. We're way too early to estimate whether it will be heavier or lighter than that. I will say we've gotten off to a good start.
For UPS, the stakes couldn't be higher. After years of higher than expected peak season costs, the company has invested billions of dollars to expand its network and drive more efficiency, adding 1 million square feet of facility space, rolling out Saturday delivery, hiring 95,000 seasonal workers, and welcoming 3 new Boeing 747-8 jumbo jets to the fleet.
We can use this to actually help steer our airplanes away from weather. We can use it to find out where our aircraft are and divert them to rescue equipment, heavy volume, and then we might have to launch one of our spare aircraft that's on hot reserve to go rescue that volume as well.
So we're talking about minutes in terms of those decisions being
Yes,
made.
absolutely.
Given all the planning and all the spending, UPS and its rival FedEx have said it's time to be better compensated. This year, FedEx is adding extra fees for oversized packages, and UPS is taking it further, applying surcharges to some residential deliveries during the busiest weeks.
The surcharges are definitely an attempt to change consumer behavior. It's getting you to not want to wait to the last minute and understand that you're going to pay a lot more for it because their expenses arguably go up way more than your rates go up. Their margins over the last several years are an indication of that.
But all the year-round planning can't control one important factor: weather. Meteorologists on staff here at UPS are monitoring that around the clock.
Initially, our first 2 into 3 weeks of our peak season look very favorable for weather. There is some cold air that should filter into the United States in about the 10th of December, and that's the time we'll have to look to see how it's going to affect the East Coast.
And so the race is on to deliver, and not just all of these packages for consumers in time for the holidays, but also for investors. For Nightly Business Report, I'm Morgan Brennan from Louisville, Kentucky.
Regal Entertainment reportedly in talks with a British rival, and that's where we begin tonight's market focus. Multiple reports say the movie theater operator is discussing a potential merger with UK-based Cineworld. Cineworld's offer is said to value Regal at about $23 a share. As more viewers shift their entertainment habits online, box office sales and movie theater attendance has suffered, putting more pressure on companies like Regal to improve performance. Regal Entertainment up more than 7% on the session to 1964. Emerson Electric scrapped its $29 billion bid for Rockwell Automation. After receiving several rejections from its rival, Emerson said it's moving on It's going to focus on smaller acquisitions. The company said it would consider buying some of General Electric's assets if GE looks to sell. Emerson Electric shares up more than 3% at 64.15. Shares of Rockwell up 3% at 197.13. And the fast food chain Arby's will buy Buffalo Wild Wings for about $3 billion, including debt. Arby's parent, Roark Capital, said the company will become a unit of Arby's, but still operate as an independent brand. Buffalo Wild Wings has struggled to attract diners, and investors are hoping that Roark Capital will execute a successful turnaround, as it did with Arby's. BWW shares flew higher they took wing. How about that?
There you go.
By 6% today. They finished at 155.60.
After the bell, Nuance Communications, which specializes in speech recognition technology, reported better than expected earnings and sales that blew past the estimates. The company also gave guidance for the current quarter that topped expectations. Shares of Nuance were initially higher in after hours. They ended the regular session up 3% to 15.86. Also after the bell, software maker Autodesk said it was cutting more than 1,000 jobs as part of its restructuring plan. Autodesk said that move is to focus on investments in cloud delivery. For the quarter, the company reported stronger than expected earnings. The shares initially fell in the extended session, ended the regular day down a fraction to 129.95.
Well, Americans have been pouring money into mutual funds and ETFs since the presidential election, and now that it looks like Washington is moving closer to delivering on tax reform, is there anything in the bill that could impact your money, your investments? Brian Reed joins us. He's chief economist at the Investment Company Institute to discuss, among other things, the tax bill and the fund industry. Brian, welcome. Good to have you with us.
Thank you.
I don't see much in this tax bill that affects investors generally or mutual fund investors particularly, but are there a couple of things to keep an eye on?
There are a couple of things. I think the area that where most investors have their mutual funds and their investments is in retirement, and there are no real major changes to how retirement accounts are going to be affected in terms of their tax treatment. There is, outside of those retirement accounts, I think two areas to keep in focus on. Number one, it's the muni bond area. There are some types of muni bonds that are in both the House and the Senate bills that may no longer get tax-exempt status, but those would be for future bonds that are being issued, not any of the current ones.
So I don't have to worry about the ones I own or that are in my funds now.
No, nothing that's in your funds or that you own
good
now.
to know.
The other part that is being debated back and forth is the treatment of when you sell a security, like a stock or a bond, that FIFO, first in, first out rule.
Yeah.
That's right, that you've talked about on here. And that is, would you be required now, if you have two stocks, one that's you've held for 20 years and one you've owned for 10, would you have to sell that 20-year-old stock or bond
that has the bigger gain in it, presumably?
That's right. So that right now, mutual funds and ETFs are carved out of that. I think there's still a lot in play, though, here about where if they look for revenue.
As we get into the end of the year, should you make a move in anticipation of what these final tax things may look like, or do you just sit back and wait and see what the final blueprint looks like?
So one thing to keep in mind is that so many things are in flux right now that you really don't want to react to the debate in Washington. But even after a tax bill comes out, keep in mind that a tax deferred is a tax saved. So in other words, you don't want to pay a tax unless you have to. Mm-hmm. And so therefore, don't sell anything or make a move for tax purposes based on the bill. But rather, if you were going to hold that bond or stock or that mutual fund, keep holding it even after the tax bill comes out.
We're calling this your exit interview because the viewers need to know that Brian, who has been a good friend of the program for a long time, is retired. You're much too young to retire. I don't know what you're going to do, but
he invested wisely.
He invested wisely. He sold those
That's
first
why
ins.
we listen to him.
What is the biggest change that you have seen in the fund investing universe for people like us, like our viewers, over your career there? And has it been for better or worse?
I think the biggest change that I've observed is the way we talk about investing and the products that are out there to help investors. We now talk about something, we refer to as asset allocation. How is my portfolio put together? How many bonds, how many stocks? We're less focused on the individual stocks and bonds. That asset allocation has brought in some of the extremes. Fewer people holding no stocks, fewer people holding only stocks. And we've seen that migrate not only in the retirement space with target date funds, which are now a staple of retirement plans. Right. We now see that's the way that financial advisors think about portfolios for their clients, and they use many of those same models and techniques. That's been a big advancement because I think you begin to think about your portfolio as a whole. Yeah.
All right. Well, congratulations on a wonderful career. Good luck to you.
Thank you very much.
Brian Reed of the ICI. Appreciate you being
with
us. You bet.
Well, prescription drugs play a major role in the opioid epidemic. According to the CDC, the amount of prescription opioids sold to pharmacies, hospitals, and doctors' offices nearly quadrupled from 1999 to 2010. Public health researchers say that in order to make a dent in that crisis is better understanding the factors driving it. Meg Terrell has more.
One new tool doctors hope to use in the opioid crisis, so-called digital pills, which may help by providing a clearer picture of prescription opioid use. They contain an ingestible wireless sensor that can notify doctors or caregivers that a medicine has been taken. The sensors send a signal to devices outside the body. Doctors at Brigham and Women's Hospital in Boston ran a small study using the technology. They enrolled patients who had broken a bone, prescribing them 7 days worth of oxycodone. That's 21 pills. What they found is that patients on average only actually took 6.
We were able to identify that patients don't really need nearly as many opioids as doctors think that they do.
That's important because data show that the longer a patient's initial prescription of opioids, the more likely they'll still be using the medicines a year or more later. The digital pill technology used in this study, made by a company called eTechRx, isn't yet FDA approved. But the first digital pill using a similar technology made by a company called Proteus was approved 2 weeks ago. It's approved for the schizophrenia drug Abilify, made by Japanese drug company Otsuka. The goal there, to help make sure medicines are taken as prescribed.
We know that for all chronic medicines, non-adherence is a big issue. And we know that for patients with serious mental illness, non-adherence is just as much of an issue. But unfortunately for them, not taking their medicines can actually lead quickly to a dramatic healthcare impact.
A key question is about privacy. Otsuka emphasizes that patients make decisions with their doctors about whether to use the digital pills. In the opioid study, Dr. Edward Boyer says the goal isn't surveillance.
It's an opt-in technology that's intended to help people. It's not intended to be Big Brother watching you all the time.
But gaining more insights into how these powerful medicines are used could be an important step in curbing abuse. For Nightly Business Report, I'm Meg Terrell.
Coming up, have you ever heard of Giving Tuesday? I hadn't. It was today, and charities cleaned up.
There's Black Friday, Small Business Saturday, Cyber Monday, and today, which is Giving Tuesday. Robert Frank takes a look at the day focused on helping others.
Giving Tuesday is quickly becoming a holiday tradition, and Americans are digging deeper this year to give to their favorite charitable causes. Total donations are expected to reach more than $200 billion today. That's up 20% from last year and more than 4 times the level of 2015. Now in its 6th year, the Global Day of Giving has gained traction on social media, grown to over 1.5 million gifts, and spread to over 100 countries. The average gift is still between $100 and $150, but a growing number of billionaires, companies, and nonprofits are kicking in matching money to increase the impact. The Bill and Melinda Gates Foundation and Facebook are teaming up to match up to $2 million in donations to fundraisers held on Facebook by nonprofits. Facebook is also waiving its 5% fee on donations to U.S. nonprofits. Billionaire Richard Branson and Virgin Group are supporting efforts to rebuild the British Virgin Islands, and nonprofits from the Covenant House to Support Wildlife and the Red Cross all have matching programs. Yet Giving Tuesday still has a ways to go to catch up to Black Friday or even Cyber Monday. Surveys show that 3/4 of Americans still don't know it exists. For Nightly Business Report, I'm Robert Frank.
Well, after that report, hopefully more people know that it exists.
Maybe we'll go home and write some checks. Good idea.
That's a great idea. And on that note, that is Nightly Business Report for tonight. Thanks for joining us. I'm Sue Herrera. We want to remind you, this is the time of year your public television station seeks your support.
And what better night to do it than on Giving Tuesday? I'm Tyler Matheson. Thanks for your support. Have a great evening, everybody. We'll see you tomorrow.